Okay, everybody, it's me, Gregory Mannarino. It is Monday, June 13, 2022. This is my post-market wrap-up. A lot of stuff to talk to you about. People, I want you to focus on not this stinking stock market, okay, for a moment. I know that's where everyone is looking, and we're going to talk about the stock market. But much more importantly, I want you to look at what's happening here in the debt market, more specifically the 10-year yield. This is the exact scenario that I have been warning about would likely happen from years and years ago. An uncontrolled sell-off in the debt market which would crush the global equity or stock market. So look, while everyone's looking over here, you're looking at the driver, and you have been forewarned about this for years. Now, yeah, stocks got walloped today, and the downside volume was extreme, over 90% here. But why? What's going on? It's the action in the debt market that's driving the stock market, period, the end. Okay, that's the way it is. That's the way it's working. If in fact this continues, okay, I have said again for a while now, many months, you can expect the S&P 500 to fall 80% from its all-time high. That is a major market crash. And look, this might even be a conservative number. If this gets worse here, again, this goes beyond the stock market, okay? It goes way beyond that. What concerns me the most as we're watching what could possibly be an implosion occurring here in the debt market, okay? It's been a ticking time bomb for years. I've described it that way. The debt market is a ticking time bomb. It's getting louder and louder. Just on Sunday, I put out a nice piece in my free newsletter describing exactly what we're seeing, right? This is what I've been waiting for. This is what all of us have been waiting for. Look, markets go up, markets go down, and it all derives value, the stock market and everything else, from action in the debt market. If in fact the debt market is actually starting to melt down, I don't think people understand how bad this can potentially get. Okay, again, resource problem, a skyrocketing commodity prices here, a lockup of the financial system. People, this was happening during the last stock market crash. Most people don't even know that because they were being distracted. Look at the stock market, the Dow Jones Industrial Average, the S&P 500, the NASDAQ. That wasn't the issue. The issue was the credit markets were locking up. Henceforth, why? The Federal Reserve got involved in massive capital injections to free up the system. If that were to happen again now, if we get a lockup, if we see, for example, this debt market continue to do what it's doing, bang, 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 those spikes that I've been telling you for a long time to look out for, we're going to get a freezing up or a locking up in the credit markets, okay? That means everything stops. Transactions stop. You go to your bank, you can't get out a single dime. There's no cash. Debit cards don't work. Credit cards don't work. Interinstitutional lending stops. That was the issue last time, and I sincerely believe it could happen again. Much worse. If the Fed decides to counter this, okay, we're already seeing skyrocketing inflation. Let's think about it. If in fact we are again experiencing this meltdown that all of us knew was coming from a long time ago, if we experience this now, it's going to melt down the stock markets, okay? That's just a no-brainer here. But credit markets will freeze up. The Fed will try to unlock those credit markets by doing what? More capital injections into the system. And what's that going to do? Accelerate inflation, moving much higher. You understand? Now, what we're seeing None of it is by accident, people. All of this has been driven by design, by central banks, okay, leading up to a climax, the grand freaking finale. You all know that, okay? Now, let's talk a little further here. Most of you know Greg Mannarino has been a raging bull in this stock market for years. That has been the correct call. Last 6 months have been terrible. They've been very rough. Banks got decimated. Okay, very bad call on my part, no doubt about it. I believed that they were oversold. I believed that there was an opportunity here, and there may very well be. However, understand, look, when I've explained how portfolios work, oil and gas producers, another big call of mine, have gone crazy. They've done phenomenal. Commodity ETFs, PDBC, absolutely. Some of my tech calls have not done so well. Some have done very, very well here. Year to date, and I just put this out in my newsletter, my personal stock portfolio is down 36%. However, if I look back at my performance of my portfolio since 2016, I'm up 64%. That's not too bad in the grand scheme of things. The historical norm for the S&P 500, historical norm every year, is 10.5%. So even with this fall here in my own personal stock portfolio, I've still outperformed the S&P 500. Okay, big whoopee-doo, not tooting my own horn. If I, look, of course, if I didn't get so heavily involved in the banks, this wouldn't have happened. I'd be a lot better off. But look, that's the market. That's the market. And everyone involved here must understand that. You can't just think that the market or your entire portfolio, no matter what's in it, is only going to go in one direction always. It just doesn't work like that. Once in a while, you got to give some back. That's the market. That's what speculators, investors, traders do. Even if you're not even in the market, if you're in the dollar, for example, you don't want to touch the stock market. You don't want to touch the crypto market. I'll talk about that in a moment. You don't want to touch gold and silver either. A lot of people out here hate gold and silver. They hate crypto. They hate stocks. They want to stay in the dollar. The dollar is evaporating. So the dollar is a tradable instrument. You understand? You're in the market. Even if you're not in the market, you're in the market anyway. So you can't escape it. Everyone's in it. That's just the way it is. Anyway, so with that you have to understand that this is the way it is, okay? Sometimes you're going to make really good calls. Sometimes you're going to make really bad calls. In aggregate, you hope that over time, you will make money in this twisted environment that we're in, okay? And it can be challenging. There is no doubt about it. But you know what? You make your best calls based on the information that you have at the time, which is incomplete. You understand? When you're playing this game of the market, let's say the stock market, it's a game more or less of incomplete information. You have to fill in a lot of these gaps with just, again, speculating and pondering things here and understanding as well the dynamics in this market are always changing. Always. And that's what, again, makes this challenging and, in my view, interesting. If things were always static, what kind of fun would that be? Even when you take a loss, let's say in a particular asset class, you sit back, you evaluate the situation, and you try to learn from it. That's the way it is. I've always told you, this business isn't for everybody, but you're in the market even if you're not in the market, like I've been telling you. You got to understand that. Whether you're invested in central bank issued notes that you don't even own. I mean, there are people here, honestly, they're not in the stock market. They're not. They rent things. They rent their place where they live. They lease their vehicles here. They're beyond their eyeballs in debt. They have no exposure to anything except the dollar, and they think they're not in the market. Well, nothing could be further from the truth. If you are in the dollar only, you're investing in Federal Reserve issued notes for which you don't even own. The central banks own these things, and you owe them back to the issuing central bank, plus the interest they create out of thin air. What a system. Imagine that we all locked. This is a slave system. You all know that on a massive scale. Period, the freaking end. All right, look, so going back to this market here, we are seeing a phenomenon that I have explained would likely happen. And in fact, I have said would happen, not even likely. I said this would eventually happen. We would eventually see a uncontrolled spiking in the 10-year yield. In my view, that's happening now. We have overshot by a lot my 3.25% target here on the 10-year yield, and it looks like there's no end in sight, at least right now. And this is going to pressure the stock market dramatically. It is time, in my view, as I said this morning, to get defensive, okay? And there's nothing wrong with taking up even a cash position, sit back for a while, although you'll be invested in dollars. Understand that, okay? You need exposure, in my view, yet again, to commodities, period. And despite the slam down that we've seen here in cryptocurrencies, and there's a lot behind this, okay? There's a lot behind what's going on right now with cryptocurrencies. Even gold and silver got decimated today, decimated. But we all understand, look, you need to be in anti-debt units. Okay, this is physical gold, physical silver, platinum and palladium. And in my view still, right now everyone's throwing out the baby with the bathwater. Everything's a pan sell-off. Crude oil did actually regain its losses from earlier today. WTI sitting about $120 a barrel. Okay. In my view, yet again, people, commodities, including crude, are going much higher. You need to increase your exposure. When dynamics in the market change, you cannot remain static. You can't remain doing nothing. You have to change with the market. You address the market you have. You invest in the market you have. And you can't flip-flop all over the place here based on, you have to have some convictions here. Okay, with me, it's been the 10-year yield, waiting for this, what we're seeing now to happen. Okay, I have been in this market a long time. I've seen a lot of things here. And like I said earlier, the right call here, despite what people have told me for years, has been to be long the market, okay? Long the market, making money, being long the market, collecting dividends along the way as well. If you wanted to, you could have been trading around those positions by selling puts way out of the money, 20%, 2 weeks out, a month out, collecting premium. I mean, there was a lot of ways to make money in this market. You cannot be a one-trick pony. But now it looks to me like we need to get defensive here. And look for ways here to preserve capital and make it grow in another way. Look, you're all allowed to have your own opinion here, and I want to hear from you. Do you not believe that commodities looks like it's the place to be right now? I think it is. Okay, this is my take. You are certainly entitled to yours. With regard to everything else, I want to hear from you on that too. Let us come together. Again, this is a big blog. A lot of very smart people here. So let's come together and evaluate the situation here. What I see unfolding is the exact scenario that you and I knew was coming for a very long time. An uncontrolled sell-off here in the debt market leading to a spike in that 10-year yield. The whole entire yield curve is getting pretty distorted right now. And look at the effect on the stock market. In my opinion, this has been a no-brainer. This is eventually going to happen, and it may actually be happening now. If this continues, if we continue to see a rapid sell-off in the debt market, okay, I wrote a whole big piece and I posted it right to my free newsletter. Again, link in the description of this video on the debt market, how it works. Okay, pay attention to these things. If this continues, it's over. I mean, this market, there's no bottom. It's a bottomless pit. Okay, understand, and realizing again that this is the grand plan, eventually to melt this entire thing down, and to lock up the system as well. Why? Because they want to issue in a new system. They want to create an even greater slave system than they have today. Even greater than we have now. So, and you haven't seen anything yet, people. I've outlined this for all of you for many, many years, how I believe this would unfold and the resource problem that is going to be created because of the bursting of the debt hyper bubble. Is the debt hyper bubble bursting? Sure as hell looks like it right now. It sure as hell looks like it. Let's see what happens, okay? How can they stop the bleeding here in the debt market? If this continues, you have to understand, when sell-offs like this happen, and I'm not talking about the stock market, I'm talking about in the debt market, it's very hard to stop, okay? Just like when stock markets crater, everybody runs to the door at the same time. You understand? So let's see. Let's sit back, get you a nice big cup of buttery popcorn and watch the shit show. If anything, it's entertaining. Its entertainment value is worth something, don't you think? Anyway, look, let me just see what else. I was just writing a few things down here. I covered a heck of a lot with you today. Forget the stock market, people, for a moment here. Let's watch that debt market, because this is what I've been explaining, what you and I have covered on this blog for many years, okay? The inevitable implosion in the debt market. Is it happening now? Like I said, it sure as hell looks like it. Let's see what happens, what they do. And if in fact it continues, people, I'm going to tell you again, when you hear other guys out here on YouTube talking about an 80% sell-off with the S&P 500, that's me. I'm the guy who said that would likely happen, and I think a lot of people are seeing the same things, okay? So don't be surprised at it if it happens here. But it goes beyond that too. This whole thing, people, look, I've told all of you every single Friday for years, love each other, care about each other, be charitable. I've explained to you and I that we are each other's best resource. Forget anything else, okay? If this thing really is about to come down and get very real, we are going to need each other more than anything else, okay? They've already established their divide and conquer mechanism. It's been in place for a very long time. Keep people divided by any mechanism that they can, race, age, gender, what their favorite color might be, who knows, anything they can. Keep this group of people hating this group of people, blame these people for that and blame these other people for that. No, we are not each other's enemies. Understand that. And if in fact we are on the precipice of this thing really turning around, it's going to get extremely real, people. And I hope I'm here with you, at least to get through this, so we can talk about these things. We got to come. We're a big family. I talk to all of you out here like you're a family member. It's really the truth. I put out all this stuff in my free newsletter, and I write to you all like we actually do know each other. It's so funny. I run into people all the time. Hey, you're that guy Greg from YouTube. Yeah, that's me. I feel like I know you people. When we interact, it's like, wow. It's fantastic. I love meeting people that, out of the blue. Sometimes I'm walking around, I hear my name being called, and I'm looking around like, who's that? And then I see some guy or some woman run up to me, and they're like, oh, I watch you all the time, blah, blah, blah. I love that. It makes me feel good, and we sit and we chat. We're a big family, and we got to stick together through this. We all knew this was coming, and I think we're okay. I really do. I think we have the best chance of getting through this if we stick together. You understand? All right, look. So that's my take on what is happening here. It does appear to me, I mean, it's in our face here. We got this spiking in the 10-year yield, just like we knew would happen. We got a pretty significant sell-off here in the stock market following that. Okay, I still say the spots to be our commodities, people, and despite the meltdown in cryptos today, let's see how that plays out too, because I think right now people are throwing out, the baby with the bathwater. Precious metals got slammed on the back of the dollar. Did you see the dollar today? The relative comparative strength of the dollar, much, much higher. It's the MMRI, Mannarino Market Risk Indicator. Go have a look at that. Click on the link here, traderschoice.net. Kind of interesting too. It's all coming together, people. But look, no fear. You sit back, you evaluate the situation, and you govern yourself accordingly. Period. The end. And we got each other. Don't forget that. We have each other, and that is the most important thing. All right, look, I'm out of here. Love all of you a lot. Please comment. Please share the video. Get it out there. I want to hear from you. I will, even if I don't write back, I promise to read the comments. I really promise. All right. I'll see all of you tomorrow morning. What else is there to say? See ya.